Alright, hello everyone, welcome back to the channel. This is Emil, and in today's video we're having a look at Illumina stock. So in this video I'll explain exactly what Illumina does, and then as usual we'll run through all the bullish points about Illumina, everything it's doing well and why you might be interested in investing. Then we'll run through the risks or why you might not want to invest in Illumina. And then finally at the end I'll give you my overall opinion and verdict and exactly what I'm doing in regards to Illumina stock. So if you're interested in videos like this, make sure to subscribe, give me a thumbs up, and with all that said, let's get straight into the video. Okay, so I'm going to do my best to describe what Illumina does, but I never did the biology in class in secondary school or high school or whatever you call it. So cut me a bit of slack there. I'm a physicist, so just so you know that. But anyway, what Illumina essentially does, it creates these very expensive machines. So these machines range from about 300,000 to 1 million, and they also create the consumables for these machines. So what these machines actually do is they're genome sequencing machines. So basically they're looking at your DNA, and from that they can kind of determine whether you have certain diseases or whether you're disposed to certain diseases. And they're also really good for like human tests and analyzing what humans react to what medicines and things like that, or seeing whether someone has cancer before they even have any sort of symptoms. So they're having a look at your DNA, seeing what diseases you might be predisposed to. And on top of that, not everyone reacts to the same medicines the same. Like some people, one particular medicine will be perfect for whatever illness that they have, but for another person taking that same medicine with the same illness, that could really screw them up and that could be toxic for them. So this is a vastly growing industry, and the reason it's growing so much is because the price of genome sequencing has come down significantly directly because of Illumina. So I'll just put up a little chart for you now so you can see how much the price for this genome sequencing has come down since Illumina started researching this many years ago. So at the moment the genome sequencing is mostly just used in research labs and to come up with these studies and try and find out more information about genes and DNA and certain illnesses and cancers and stuff like that. However, once the price currently costs about 1,000 to do one of those tests. However, the price is still coming down, and once it reaches about $100, then we can start using that technology to test people like me. Once I go into a doctor's appointment or once I go to the hospital, they can just test me for $100. And once the price is that low enough, then everyone can get tested much more frequently. And that's one of the first bullet points for Illumina, one of the good points, where there's such a huge potential for them. Because at the moment it's not used very often in those kind of individual tests. So once the price comes low enough, then it can be used. And that's when things could start getting very interesting. So yeah, they believe they can get the price down to these kind of levels. The CEO said, "This is the decade that genomics becomes available to cancer and genetic disease patients on a mass scale." So if you believe the CEO, which I probably do, this could be a very, very good long-term investment. Oh yeah, I forgot to mention, they also do those kits, those home kits where you can see your ancestry. They were kind of popular a few years ago, like 23andMe. So you give them I never did it myself, but I think you give them like a blood sample, you send it off, and then you get your heritage, your ancestry. So like, I'm 50% Irish, 40% Mediterranean, whatever, blah, 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 13% Roman, etc. But that's really becoming a smaller and smaller portion of their revenue. But I just wanted to outline that, or just to mention that. But yeah, that's getting much less popular at the moment. So that's a declining growth section of their revenue. But yeah, they do that, but it's not something that you should be interested in or looking at really. It's not one of the long-term sustainable things, and the revenue numbers for that get worse every year. But that often people pay too much attention to that with Illumina stock, whereas the other points are what is actually interesting about Illumina. So they just unveiled their new mid-tier products, their new mid-tier machines. So these mid-tier machines are produce 2.5 times the output for half the cost. So these new machines that are coming out, they're coming out now, but the consumables that you need for them won't be released until the last quarter of 2020. So this has kind of created a backlog where people aren't buying the current machines because they know the newer machines are coming out soon, are going to be useful very soon in like a couple of quarters. So there's a pent up demand for these new machines. So there's potentially next in like 2021, then there's going to be a huge demand for these new machines. So potentially next year, it could be a very good year for Illumina. So Illumina make the majority of their money from the consumables. So every time you use their machines, you have to have this certain, I don't know, test kits or whatever. And that's where they get the majority of their revenue. So it's like a recurring revenue. And as the transition comes from research-based studies to clinical tests, the consumable revenue is going to increase dramatically. Because as I mentioned, at the moment, most of their revenue is coming from research stuff rather than actual testing on patients and people who are ill. But as that transition occurs, the consumable revenue is going to start really exploding, potentially anyway. And the final point, so one of the real great points, one of the fantastic things about Illumina is that they're really helping the research into cancer and the detection of cancer. So they're getting very close to making this mass affordable. And one of their products, which isn't yet approved in the US, but it is in 20 other countries. But they're just waiting for FDA approval for this product, and they've just added a former FDA commissioner to their board, so that could really help them being able to get that product to the US where they can make some money from that product. Alright, I'll just give the last few points why I personally would buy the stock, or why I would be interested in buying the stock. So firstly, you're obviously supporting an industry that's helping the human race. There's enormous growth potential for Illumina. And for me, I have no health industry stocks, so this could be my chance to diversify into that industry. The revenue is expected to grow 11% for the next 5 years, which actually isn't that impressive, to be honest, for such a high price multiple, but we'll get into that in a minute. They have an excellent balance sheet, so that's always fantastic, and they're completely the number one player in their market and in their field, so that's one of the great points about Illumina. Alright, okay, so let's just have a look at its percentage growth. So this graph is from hypercharts.co, I think it is. So as you can see, their revenue growth is the blue line, and their operating expenses year over year is the red line, and it's in percentages, so just to make that graph a bit more clear. So as you can see, their revenue is averaging about 15% for the last number of years, and it's supposed to be 11% growth for the next 5 years. So is this good growth? In the past 5 years, it's pretty good growth. This is supposedly a growth company, but 11% for the next 5 years, it's not really as impressive as it should be, in my opinion, because we'll have a look at the price and price multiples. But yeah, it's a pretty expensive stock. The PE ratio, let me grab up the price to sales ratio. So here's a chart of the price to sales ratio. So the price to sales ratio is the revenue, is the price of the stock in comparisons to the revenue of the stock. So the lower the better. And usually a fair value for a price to sales is 1 or between 1 and 2. But obviously this stock is much more expensive. So their price is much more than their actual sales. So as you can see, their price to sales has been increasing in the last few years, and now it's averaging about 15. So that's a very expensive stock. So just be aware of that. It's increased dramatically in recent years. So this is a chart of their stock price. They're a $50 billion market cap, and they did crash quite significantly in the coronavirus, but it's completely come back. So it's at the prices that it was at before the coronavirus. And this might be because it is benefiting slightly from the coronavirus. Well, not really. Like, there are certain products that are helping with the study of coronavirus. However, a lot of their other machines and consumables aren't being used at the moment, so it kind of balances out. So I just wanted to show you how much it's grown in the last number of years, and it's kind of at one of these humps at the moment. So here's the last chart I want to show you before I get into the reasons why I wouldn't be interested in buying the stock. So this is just a quick show of their revenue and their gross profit in yellow. So revenue blue, gross profit in yellow, and their operating income in red. So all are increasing, which is obviously great. They have a huge gross margin, so that's that's good to see, and they're a profitable company, which is also great to see. But however, as we mentioned, maybe they're not growing as much as their price is saying they should. So usually when I'm looking at a growth company, if their PE ratio is 20, I want growth of at least 15%, and this growth is 11%, and their PE ratio is 50. So an extremely expensive stock. So yeah, that's one of the reasons. That's pretty much the main reason that I wouldn't buy the stock at the moment, just because it's so expensive. Maybe if it came down a bit to the March lows that recently happened, that would be a better buying opportunity. But at the moment, it's very expensive in a price to sales and a price to earnings ratio. Another couple of reasons why I wouldn't be interested in buying the stock personally is because I really researched this company, but I've still found it very difficult to understand the technicalities of genome sequencing, and I don't really have an advantage in this area. I don't know how far ahead they are and how amazing their technology is. I'd be much more in my circle of competence in engineering or physics kind of industries than biotechnology. So if you've even done biology in secondary school or high school, whatever you call it, or you did biology in university, or you're a medicine student or a doctor, this could really be an advantage for you looking into this stock, because you have that knowledge. So I would definitely recommend, if you're in that industry, to really research this company, and then you'd be able to make a much more informed decision than I can, because you actually know what a double helix is. Like, I don't really understand any of it. That's just one more reason that I'm not interested in the stock right now. Another reason, as I mentioned, is obviously the valuation is extremely high, and it's corrected from the coronavirus lows in March, so it's at the same price that it was previously. So at the moment, it is extremely expensive, and there is talk of competition catching up as this technology has progressed. They were the only player in this market for a long time, and they've been dominating for many years. But maybe there's talk of competition using their technology and catching up to where their position is today. And competition is good for an economy, but mightn't be good for this company. Right, so finally, my final verdict: will I be buying the stock? For me personally, no. For the reasons I just mentioned, I don't understand the company well enough, and I prefer to invest in companies that I really understand, and I highly suggest you do the same. Only invest in companies that you understand, or that is just a very solid company. But at these kind of multiples, I don't think I understand the stock well enough to justify me purchasing the stock right now at these prices. However, if the stock came down, I think it would look a lot more attractive for me personally. But there is huge, enormous potential for this company, and they're really revolutionizing the medicine industry and can benefit the human race enormously. Yeah, so there's so many growth catalysts for this company, but the revenue growth multiples are just not attractive enough. 11% a year at a price to earnings ratio of 45 is not attractive enough for me personally. But if you understand this company a bit better than I do, like, there are those delays in those machines that are coming up, and a lot of potential growth catalysts, like the new cancer spin-off that I mentioned as well. So maybe the price multiple is justified, but for me it's just too high right now. But anyway, with all that said, I hope you enjoyed the video. Please give me a thumbs up, subscribe for more videos like this. I really hope you enjoyed the video and you learned something from this video. I've got some more really interesting videos coming up, so make sure you subscribe, turn on the notification bell, and I'm looking forward to seeing you in the next ones. Thank you so much for watching. Goodbye. Cheers.